and your next stop will probably be 60, 62 in very short order. I think over the next 6 months, and this is, I mean, I don't hardly ever go out on a limb like this, but I think $100 an ounce, I think within the next 6 months, it's an easy call.
Yes, we closed above this level, and you could make a case for a little cup and handle, but it hasn't confirmed. Watch on Monday. You want to see confirmation, because if it confirms, your next upside target's around 60 to 62 and potentially even further than that. We need to confirm the break by Monday, having a close above 42.27, the high from Friday. On Monday, we must see a close above that. If that happens, it is a confirmed breakout.
In a powerful market update, financial analysts Bill Holter and Gareth Soloway outlined one of the strongest silver forecasts seen in years. Their discussion highlights that silver is approaching a rare technical setup that could ignite a major price surge, potentially pushing the metal toward $60 to $62 in the short term, and even $100 an ounce within 6 months. Gareth Soloway notes that silver is forming a potential cup and handle pattern, a classic indicator of upward continuation. But confirmation is everything. The market must close above $42.27 Friday's high on Monday to validate the breakout. If that level is confirmed, Bill Holter adds that the next upside zone sits firmly in the $60–$62 range, with room for even higher targets as momentum builds. Both experts rarely issue bold predictions, which makes their shared conviction even more notable. With technical pressure mounting and global demand strengthening, this moment could mark the beginning of silver's next explosive leg higher. A confirmed breakout would send a clear signal. The silver market may be entering a historic phase that traders and investors cannot afford to ignore. If you found this helpful, like, share, and subscribe to The Metal Bar. Turn on the bell so you don't miss any updates, and comment below to share your thoughts on it. Appreciate you for tuning in. Now, listen to the interview.
All right, so same thing like gold. The only difference with gold here is that gold is not at all-time highs, right? It just broke above a descending wedge trend line, all right, versus silver, new all-time highs. You know, the reason why I stress confirmation is because it's a probability differentiator, meaning that when you have a break above a major trend line, whether it's silver here at the all-time highs or gold on the descending trend line, right? The odds do favor. So you go to about 60% chance that it's a real breakout. But 60%, I mean, that's just a little bit higher than 50-50. I want 75, right? And that's what we can achieve when we get confirmation. Sure, price could retrace back to the trend line that it broke out, but it is so firm at that point that it favors a continuation of the move by about 75%. It's pretty incredible how the odds sharply swing. You could even argue maybe as high as 80% at that point. So going back to this chart, we're looking to see, does it confirm on Monday? If it does, what's your upside target? Well, I mean, I think in general, what we have to do now is we have to play with the parallel right here, right? So this would be your next target level, the upper end. And this is where, if we go out here, guys, and this is where I'm getting my 60 to 62 level, if it chops like this, look at what's right up here, 60 to 62. You guys see that? And that's where that next resistance would be, assuming we confirm. All right. So again, many of you guys probably wondering where does 60 to 62 come? It actually utilizes the support line, which would be the bear case, which we should go over very quickly as well, just like I said on gold. What if this doesn't confirm? Well, as long as price stays above this line, it could confirm by any time in the future. The second we get a daily close below here without confirmation, the breakout starts to basically negated, the potential breakout, and we go back to watching which way is it going to break. Is it going to break back above and confirm, or is it going to break down here and confirm below? If it confirms below, this becomes your first target at 45.60 to 45.70, followed by a move down to about $43 to $42. All right. Right now, the breakout is looking promising on silver. I was a skeptic, as you guys know, I was skeptical. But again, the charts are in charge. I always say that, guys. Listen, my analysis, I'll be right about 3/4 of the time, 75% of the time. If you look at all my videos, all the calls I've made, 3 out of 4 times. Still leaves 1 time out of 4. It's 25% of the time that I'm not going to be correct. And that's just the law of averages, right? It's the law of probabilities. Is that I've never met someone who literally could predict every single thing nonstop. So you have to be open to that. That's part of trading. That's part of investing, that you have to be open to the fact that even if you bat 75% of the time, any one of these next few trades could be the one that you're wrong on, right? Now, we'll see, obviously, if we confirm on gold and on silver, the breakouts. But I always like to be straight up with you guys, right? It's the mantra of verified investing is no BS, just charts, right? And so the idea is I just got to be, if we're looking at charts, then I'm going to be straight up with you about everything about me as well. If you remember, we talked about just in my last few videos, I said, listen, if we break through this level, we're probably hitting $57 per ounce. That is your next technical level. Well, guess what? Just on Friday, we went to $56.53. So we're all basically almost there. Now, this is the kicker, though. So number one, yes, we closed above this level, and you could make a case for a little cup and handle.
And you can see that for sure within the coin market. Pretty much most silver products are bid at spot or slightly, Eagles are bid over spot. But junk silver, which was really the only form that Americans could buy back in the late 70s and early 80s, junk silver, the bid on that now is like $4 under spot. You can buy junk. It's the cheapest form to buy. It's the best form to own. But what's happened is a lot of the people who bought back at $40, $50 back in 1979, 1980, those have come to market. Those people, a lot of those have sold. And what the dealers are doing, or what the wholesalers are doing, is they're taking that silver in $3, $4 under spot, and they're sending it to refiners, and they're picking up an extra 6 to 8% commission or VIG or whatever you want to call it, because that junk is being melted down. Now, this is a temporary situation because there's only so much junk that can be sold, and I think that's slowing down already. But what this means is going forward, there's way less junk available than there was just 6 months or a year ago, because so much of it has been melted down. In the future, in my opinion, junk silver will be the most expensive form of silver in the United States.
In this detailed market breakdown, analysts Gareth Soloway and Bill Holter explain why silver is now at one of the most critical turning points in its chart history. Unlike gold, which recently broke above a major descending wedge, silver is pressing into new all-time highs, making the next move extremely important. Soloway highlights that a breakout above key resistance carries roughly a 60% probability of being real, but true confirmation pushes those odds toward 75%, 80%. A major shift for traders looking for a sustainable move. The crucial test comes Monday. Silver must close above the recent resistance level to confirm the breakout. If that happens, technical analysis points to a powerful move toward the $60–$62 range, derived from the upper parallel trend line, acting as the next major target zone. This region aligns with long-term resistance and explains why many analysts see $60–$62 as silver's next logical stop. However, if price fails to confirm and breaks back below support, downside targets include $45.60, $45.70, and potentially $42, $43. Probabilities matter, and both analysts stress that no trader wins 100% of the time, even with a strong track record. Holter also notes a major shift in the physical market. U.S. junk silver is being melted down rapidly, reducing future supply and setting up a potentially explosive environment once the temporary surplus disappears. Let's get into the interview.
Well, right now, the United States dollar, the treasury bonds, the treasuries represent, 50 to 60% of foreign central bank holdings. So if the dollar cracks, what does that do to the central bank balance sheets? Now, if they have gold on it and the gold has gone up and the dollar's gone down, those countries will be better off than countries. I lived in Costa Rica for 5 years, and the Costa Rican central bank is exclusively U.S. treasuries. So what's going to happen in a country where all of a sudden their central bank goes belly up? it's going to be a disaster. So it depends on the country, and it depends on the balance sheet of that specific country. I mean, miners have been the star for the year, and I think they're going to be the star going forward. The only problem with that is if you buy miners and you have it in a brokerage account and your broker goes down, your stock's gone. Again, go back to the Great Taking. If you've not watched it or read about it, do so, because you're playing a game with two hands tied behind your back and hopping on one leg. The bottom line is when institutions go down, you're going to lose your capital. So if you want to buy miners, go ahead and buy them. I think you'll make a ton of money, but make sure you have the stock certificate, because that will act as the title to your car or the deed to your house. That is proof of your ownership, and it can't be taken away. But it will be taken away. Just so you understand how this works, Vlad, think about all these brokers that are advertising $7.95 for a trade, whether it's 100 shares or 1,000,000 shares, it doesn't matter, $7.95. What kind of business model is that? There's no way they could be profitable, fly around in corporate jets, have huge corporate buildings. The way they're making their money is when you buy a stock before settlement day, that stock is probably lent out. So they're earning interest on your stock that they've lent out on money that they didn't have to put up. That is the profit model for Wall Street, is to lend out your securities. And when the music stops, you're not going to get your securities back. So that's why you want the certificate in hand.
In a recent discussion, Bill Holter dives into the growing concerns surrounding global central banks and the potential consequences of a weakening U.S. dollar. With U.S. Treasuries still making up a massive share of foreign reserve holdings, a sharp decline in the dollar could trigger significant stress across countries whose balance sheets rely heavily on American debt. Holter highlights that nations holding strong allocations of gold may weather the storm, while others, especially those fully exposed to U.S. Treasuries, could face severe economic fallout. The conversation also turns to the mining sector, which both analysts view as a leading performer this year and possibly for years to come. However, they warn investors about the structural risks inside brokerage accounts. As Holter explains, many brokers lend out client-owned shares before settlement, creating unseen counterparty risks. In the event of institutional failure, those borrowed securities may never return to their rightful owners. Holding physical stock certificates, they argue, is one of the only ways to maintain provable ownership and safeguard wealth. As global financial instability rises, understanding these mechanisms becomes essential for investors seeking real protection and long-term opportunity. If you found this helpful, like, share, and subscribe to The Metal Bar. Turn on the bell so you don't miss any updates, and comment below to share your thoughts on it. Appreciate you for tuning in.